Good morning, good afternoon, or good evening. I hope you're all doing well. So, all right, what I got for you guys today? I found a book that is called The Book of Inside Information. This book is 500 pages. It covers topics from money, health, success, retirement, investments, taxes, fitness, travel, collecting, education, and so on and so forth. There's many more topics. So you've always heard the adage, knowledge is power, right? Well, this book is going to make you strong, put it that way. So since tax season kicked off about 3 weeks ago, let's talk about some taxes. I'm going to cover a little bit of this book every day. And we're going to kick it off with the taxes because it just happens to be the perfect time of year for that. I opened up a page and I swear this is a tip for gaggers. So it says, if you gag when the doctor applies a tongue depressor, it helps to sing ah in falsetto. You may feel silly, but you'll avoid the scary gagging reflex. So anyway, there you go. How about that? Okay. Let me get up here to this table of contents. So let's take a look at the table of contents, everybody. All right. Oh, fuck, I was way off. Chapter 4. Saving taxes. So this is like probably going to be my favorite chapter of this whole book. So let's learn some shit, yeah? Fine points of tax law. An individual reimbursed by his company for the business use of his car at a rate greater than the IRS standard mileage allowance must include the excess as income. He can then deduct the excess as a business expense if he has substantiation that will satisfy the IRS. It does have a site reference here. IRS letter rulings 8003119 and 8004052 for references. Feel free to take a look, check it out. Gain on a house sale may not be taxable if the sale proceeds are used to purchase a yacht. But both the house and the yacht must qualify as the taxpayer's principal residence. IRS letter ruling 8015017. Recording serial number of stocks might help reduce your taxable gain. It proves to the IRS when and for how much the stock was purchased. If the share's price went up, sales of those shares that cost the most produce the lowest taxable gain. The taxpayer can't prove which shares he's selling. The IRS computes the gain on a straight first in, first out basis. The source for this is Kluger Associates Incorporated versus Commissioner 2nd Circuit 317 of 1980. A silver lining to an unhappy land investment. IRS considers land a long-term capital investment. Buyers can write off losses in full against capital gains and up to $3,000 per year against their regular income. If you bought an undeveloped lot from a shady land sales company, it may pay to finish paying it off, sell at any loss, and take the tax deductions. An employee who relocates because of a job transfer loses the right to deduct moving expenses if he doesn't work in the new location for at least 39 weeks. There's an exception to this. The 39-week requirement is waived if the employee loses his job for reasons beyond his control or is retransferred to another location by his employer. If your employer reimburses or pays your moving expenses, take allowable tax deductions and report the reimbursement as additional income. This is important. Check to see whether your employer reported the reimbursement as wages on your Form W-2. If so, don't report it again. Landlords seeking to persuade tenants to move often agree to pay part of all the tenant's moving costs. This is a tax trap. The landlord's payment is fully includable in the taxpayer's income, but the expenses reimbursed are not deductible. The reason? The move isn't connected to a change in employment. This is one of the conditions to be met before moving expenses can be deducted. And this is the source for that is IRS letter ruling 8104100. All right, next. If the doctor orders you to take a vacation and says it's medically necessary, it may be deductible. One case, The doctor wouldn't permit the executive to go to Europe unless he took his wife along, since she was specially trained to deal with his heart illness. The wife's travel expenses were allowed as a medical deduction. Hey, that's good to know. See, look, guys, there's lots of little nuances when it comes to, law, especially tax law. Lots of little things like that the average person would never know. I'm telling you guys, there's going to be tons and tons of little gems in here that can be helpful for you, for someone you know. I mean, most likely there's something here that I'm going to cover that will absolutely help every one of you. Just listen and pay attention to everything we go over here. I mean, there's so much stuff. Like I said, there's little strange nuances when it comes to these type of laws and different things like that. So just pay attention, and I guarantee you're going to find something that's useful for you. If the check you mail to the IRS should bounce, you can sometimes avoid interest and late payment charges. Just be sure to send in a new check within 10 days after the IRS notifies you that the original check was not honored. Enclose a detailed explanation of the circumstances beyond your control that caused the check to bounce. If the circumstances were not beyond your control, you're stuck with the extra charges. Internal Revenue Manual, page 2, section 8, also page 2, section 16. All right, the IRS can search your safe deposit box. If you refuse to pay taxes due, or if the auditor thinks you are hiding assets, the IRS can force open the box if you won't supply the key. Shit. Damn. That sucks. The IRS usually will not try to collect back taxes by levying against current Social Security benefits, veterans benefits, GI Bill awards, and similar payments, even though it has the authority to do so. The exception here, flagrant or aggravated cases of neglect or refusal to pay. So Internal Revenue Manual, page 5, section 30. If an IRS agent calls, find out if the person is a revenue agent or a special agent. The agents are required to identify themselves. Exercise extreme caution if it's a special agent. They are assigned to suspected fraud cases. Call your lawyer at once. If a parent buys a car for a dependent child, but keeps it in the parent's name, any uninsured casualty losses and interest payments to the extent allowed by law on the car are tax deductible. If the child co-signs the loan, interest is deductible as long as the car qualifies as part of the parent's support of the child. All right, next. Proof that a car was used for business purposes. Keep a simple log in a 3x5-inch notebook listing the date, beginning and ending mileage, and purpose of each tax-deductible trip. Separate pages for business, medical, charitable, and moving expense mileage. Simplify preparation of the tax return. That's a good idea. It's always good to be organized, especially when it comes to taxes and you're trying to get your deductions all sorted and everything. The better you can stay organized, the easier that stuff will be. All right, next. Deductible costs of business driving include payments to injured pedestrians. A recent decision. Accidents by drivers are inseparable incidents of driving a car. Costs incurred as a result of such an incident are just as much a part of overall business expenses as the cost of fuel and maintenance. The source from this court case is Dancer versus Commissioner 73 TC number 88. Next, casualty losses. Damage or loss of home or personal property entitle you to a casualty deduction, but not to the amount of the replacement cost. You can only claim the lower of either the actual cost or the fair market value immediately preceding the loss. In either case, you can only deduct that part of your loss that exceeds 10% of your adjusted gross income, and the first $100 of each loss is not deductible. What a weird law. And it is cited for this case here, Gay versus Commissioner TC Memo 1980-19. Okay, next. You can't be audited twice by the same IRS agent. Exceptions: a 3-year gap or longer between the periods under investigation, or an intervening audit by a different IRS agent, or cases that are part of the IRS's Coordinated Examination Program. Internal Revenue Manual, pages 4 and 5. Next, IRS audits can be postponed if an immediate examination would adversely affect your business or personal activities. That's cool. If you need a particular attorney, accountant, or employee to help with the audit, a postponement will be allowed to minimize impact on that person's business or personal activities. Under ordinary circumstances, postponements are for up to 60 days. A request for a longer extension must be approved by an IRS group manager. IRS Manual, pages 4-11. Next, investment advice is deductible, subject to the 2% of adjusted gross income limit now in force. But the cost of acquiring an investment, a broker's commission, for example, is not. So recommended, have the person who advises you and handles your investment transactions itemize the bill for services. So a recent case source here says a valuable deduction for investment advice was lost when a taxpayer could not prove how much of a one-shot investment fee was allocable to advice. So this is, the source is Honadell 76 TC number 26. Next, casualty losses are deductible even when caused by the taxpayer's carelessness, but they are not deductible if caused by gross or willful negligence. The difference: damage to a car is deductible even when caused by the owner's poor driving, but the damage is not deductible when caused by drunken driving. Holy shit. Okay, wow, and there's a source here, IRS publication 547 from 1979. Next, legal costs incurred in an action to secure title to a piece of real property are not a deductible expense. They are capital costs, which must be added to the taxpayer's basis in the property. So this source is Estate of Santiago Franco versus Commissioner TC Memo 1980-3340. Next, bankruptcy proceedings release an individual's wages from a levy by the IRS. One case, a taxpayer declared bankruptcy on May 14th. So the IRS released the levy on her wages on May 15th. But on May 16th, her employer sent to the IRS wages that she earned between May 5th and May 11th. The taxpayer got her wages back. The reason: under state law, she wasn't entitled to receive her wages until payday, which was May 16th. And that was after she filed the bankruptcy petition. So the case source here is Florian Robert Bebiar's number CHP 1380 20591 WDNY from 8/26 of 1980. All right, next, and this is going to be the last one I cover here. Long distance phone calls made to a psychological counselor are a deductible medical expense, and the case source here is letter ruling 8034087. So yeah, I'm going to call it right there, guys. There's more to come, so stay tuned. I'm going to drop one of these every day until this whole book is covered. Okay, guys? So thank you for listening, and I'll see you back here tomorrow. Have a good one.